I rise today to talk about another very important middle-class economic issue, and one that we've been talking about ever since I got here, and that is the overwhelming burden of student debt. Earlier this week, I spoke at something called Envision 2030 in Bismarck. It was a convening of academic and political leaders in my state to discuss the needs of students who are embarking on and graduating from college in the next 15 years. Incredible amounts of time were spent on college affordability, and I challenged many of the education leaders to take a look at what it's going to take to reduce costs. So that students do not have to borrow so much money as they are pursuing their higher education opportunities. Like the rest of the country, North Dakota students are getting bogged down in debt before they even graduate from college. This debt impacts their futures, their families, and quite honestly, their communities. And I would argue this debt is in fact endangering the economic viability of our country. According to the Institute for College Access and Success, the average amount of student debt a person owes in North Dakota has now risen above $27,000. And North Dakota students have some of the highest rates of indebtedness in the country, as 83% of the class of 2011 graduated with some form of debt. More than, honestly, any other state in the country for that year. And so across the country, I think these statistics paint really a bleak picture. And I just want to point out, as we are looking at debt and what debt can do to an economy, certainly we talk a lot about the debt that we have in this country. If you take a look at this chart and you understand this peak in debt here is really right after the debt crisis. It was a rising consumer debt and credit cards. Here's student loans. This is mortgage debt, obviously at a peak, auto loan debt. Notice this, that everything went down and has come down in terms of debt, percentage of balance that is 90 days or more delinquent, except one category, and that's student loan debt. So we like to, I think, tell the story honestly. These same people who have credit card debt and mortgage debt, they're not deadbeats. They want to pay their obligations. So do these students want to pay, but they're finding it virtually impossible to pay this amount of student debt with lack of economic opportunity and with the rising amount of challenge that they have in meeting these obligations. If you want to take a look at it, because a lot of people think, well, this is just a problem for kids in their 20s. That's not going to be a problem. You know, they'll work their way through it. They'll become that opportunity will be available to them. I want you to take a look at this. The group most impacted, if you go back to 2004 and you take 42% of everybody impacted was in their 20s. Now it is 32%. And that growing impact that goes not only into your 20s or into your 30s, but also into your 40s. And also we have the highest percentage increase probably is in the number of people 60 and over who are burdened by student debt. It says that this chart tells an incredible story, which tells you the burden that all of this debt, student debt, is having on the economy. Well, what do we do about it? I've signed on many pieces of legislation here that would do one simple thing. It would help refinance this student debt. We have record low amounts of interest rates in this country. Never before seen the continuity and the consistency of low interest rates. Amazing. If you have that interest rate and you have a car loan, you go refinance. If you have that interest rate, high interest rate, and you have a home, you go refinance your mortgage. But can you refinance your student debt? You'll never take advantage of these. Well, in North Dakota, we have an institution called the Bank of North Dakota. Might shock people here, given the kind of attitude I see towards the Export-Import Bank. But the Bank of North Dakota is a bank that's owned by the people of the state of North Dakota. About a third of their capital is invested in students. It's an opportunity to develop our state. We make home mortgage loans, we make beginning farmer loans, we participate with local banks on economic development loans. We've got some great economic development programs at the Bank of North Dakota. I'm still in the we mode because I used to serve when I was Attorney General on their board of directors, and honestly, Senator Hoeven ran the Bank of North Dakota. It's an amazing institution. But when we find our citizens crippled with debt, what do? We try and figure out how we help them. We don't say simply, we're going to make more money on you by keeping our interest rates at 6.8 and not letting you refinance. We say, you know what, that's not helpful to our economy. And so let me tell you about the results of the consolidation program that the Bank of North Dakota runs. First off, there's qualifiers. The first qualifier is you have to be a U.S. citizen. You can't be for consolidation. You can't any longer be attending school. You must have been a North Dakota resident for 6 months, and if this gets out, we may see a flood of young people coming to our state. And you must meet BND, Bank of North Dakota credit criteria, or have a credit-worthy cosigner. Your loan options are any student loan. Any student loan that you have or your parents have or your grandparents have can be consolidated into this program. So we'll take Stafford, Perkins, parent loans for undergraduate students, which is called PLUS in North Dakota, Grad Plus in North Dakota, DEAL, which is another student loan program that they run at the Bank of North Dakota, and any private lending from any other institution. And so what do? We consolidate all of that debt and refinance it into lower interest rates and offer people a number of different packages. Now let me tell you what the consequences of that is. So let's take a look at someone right now who is in a student loan program that charges 6.8% per annum for that student debt. If you have a loan amount of $35,000 at 6.8% and your repayment term is 300 months, now think about that, 300 months. What is that in terms of a lifetime? That's a lot of months for a lifetime. Your monthly payment is $242, or almost $243. The total interest that you will pay traditionally without consolidation and without refinancing is about $38,000. Well, under this refinancing program, you can do it one of two ways. You can refinance on a fixed rate, or you can refinance on a variable rate. And you may say, oh, variable rates, isn't that what's gotten so many consumers in trouble? What the bank does is they say you can only raise the rate 1% a year under the variable rate, and you're capped at 10%. So you'll never pay more than 10%, or you can opt to just lock in at our fixed rate, which at the time that this chart was done was 4.71%. If you use the variable rate, you could lock in at just slightly above 2%. So let's take those same payment terms, 300 months. Your monthly payments for the Deal 1 fixed rate would be less than $200 compared to almost $250. And your total interest paid would be $13,000 less over the lifetime of that loan. If you go with the variable rate, assuming that we don't see a dramatic increase in interest rates, you will pay $150 a month, literally almost $100 less. Your total interest that you'll pay at these low rates is $10,000, and compared to $37,000. Think about that. Think about what that means to a family. And if we even take this further and we say, let's speed up payments under the DEAL program. Let's try and do this in fewer months, because no one wants to be locked in for 300 months of their life. If you look at going to a fixed rate for 157 months, you can, in fact, greatly reduce your overall interest paid to about $12,000, your monthly payment being $300, and the total amount that you will pay. Now let's compare that to the fixed rate going to 300 months. You pay almost $60,000. Your total payment, if you go to a shorter period of time, almost cut that time in half, increase your payments to $300 a month, you will in fact only pay $47,000 on a $35,000 loan, going with a fixed rate. that we currently have. If you go to variable, a $35,000 rate, assuming the interest rates stay low, $35,000 loan amount gets you down to just under $40,000. Why can't we do this for every student in America? When I hear that the solution to the student debt problem is that we ought to, limit the amount of repayment to 15%, or that we ought to forgive it after so many years, you know what? I think that that's not a solution for a lot of good North Dakotans who want to repay their debt. But to simply say we will not consolidate, we will not give an opportunity for students to take advantage of low interest rates, it is incredibly irresponsible. And it is tone deaf to the impact that this has on whether we can start new businesses, whether we can get a mortgage for a home, whether we can buy a car, whether we can save for our retirement so we don't have pension problems in the future, and whether we can save for our kids' college education. Why aren't we doing this? Someone answer that question for me. If we can do it in the state of North Dakota, if we can make this happen for students in the state of North Dakota, why can't we make this happen for students all across this country? That is really the question that I've come to ask, because I think a lot of people talk about the ideas of restructuring student debt, talk about the ideas of what we can do to help students, and a lot of it is about debt forgiveness. You know what? I think people want to repay their debt in America. If they signed saying they'd repay it, they want to repay it. Let's give them a chance to do that without continuing to mortgage their future and make them slaves to student debt. And just a personal story, I have a niece and her husband who were able to use this program, and they continued to pay the same amount of payment that they were paying under the old, paying off 4 or 5 different loans. They consolidated, and they're still spending the same amount repaying their student debt, and guess what? They have cut the time for payment of their student debt in half. And they're able now to save for their children's future and for their children's college education. And so people say it can't be done. You bet it can be done. We're doing it in North Dakota, and if we can do it in North Dakota, we can do it in this country. Let's step up. Let's recognize this for the economic problem that it is, not just for families, but for this country. And let's do something. Let's quit talking about student debt and actually do something about that. And with that, Mr. President, I yield the floor.